yeah. We need to do
baby.
dancing before this happens every day.
This is so great. Dude, Josh, so a couple things right at the beginning of the show here. First of all, great graphic with the like and share and comment. Yesterday we had like 40 comments on the show. So if you're seeing something, you're liking something, definitely tell us about it. We appreciate our dear listeners and viewers very much. I was remote yesterday, so I was not able to see all those great comments as they came in. So I really appreciate everybody who was commenting. Second thing is, I think it's really cool that we've got that countdown that we have out there now, because that helps hold us accountable. And when that click gets to 0, we got to be ready to go, because there's been a time or two where we've been 30 to 45 seconds late and just kind of chalked it up to, well, everybody's clock is a little different. You know what I mean? They won't know that we're 30 to 45 seconds late. So this is a lot of good stuff here. Driving accountability, good graphic, and great show yesterday, my friend. Too bad today's going to be a lame, boring show. I mean, I wish we had anything to talk about today.
Dude,
it's just bad.
I know, that's hilarious. Taz, look, I got to do a shout out for Taz here. Driving for Meals on Wheels, and he starts canvassing yesterday. I love it.
Nice.
We're going to talk seriously on Monday about about really needing to take action, and we're going to jump into that.
I also love that. I took my kids driving Meals on Wheels once. My sister Jana, who I'm not sure if she's watching or not, she is somebody who does that a little bit and is connected to a lot of those people. And so, like on Thanksgiving last year, I think it was, or 2 years ago, needed to sub in for somebody, and it's been one of those things that I've kind of like intended to go back and do. But it was a really cool service project to do with my kids.
Yeah.
And just drove to like 5 or 10 houses. You're there for 45 seconds. I have kids that are ages 13 to 7, so they were like 2 years younger then. So it was really cool because a lot of these people are elderly or convalescents or shut-ins. And so like it wasn't just some dude bringing them a meal. It was like my kids, and that kind of, brought some joy to their life and stuff like that. So I like Meals on Wheels, and I got to do that again. So good for you, Taz.
Yeah, good job, Taz. All right, so let's get the program started. My name's Josh Weidman. I'm a hard money lender with Hard Money Bankers. We have an office right here in Central PA. We fund real estate investment loans for real estate investors. We are a self-funded lender, which means that we can work really quickly. If you're looking for funding for your next project, whether it's a fix and flip, whether it's a apartment building with some value add construction, bridge loan, whatever, give me a call, shoot me an email, or go to the website, fill out an application. We can give you an answer in a couple hours on what we can fund on the project. And if it sounds good, we can get that thing funded within 24 hours. So that's it for Hard Money Bankers. And Judah, why don't you introduce yourself?
Yeah, so Slatehouse Group is a full-service property management company and real estate company. We like to define ourselves as a modern real estate company. We can list your house. We can help you buy a house. We can help you manage a house. Whether it is anything from the perspective of real estate, whether it's investment real estate or not. So and we basically do business in 4 different states. We manage about 4,000 units. My brother Jason here, thanks for listening, who is a great economic mind who I love to discuss a whole lot of things with, says, explain hard money. Real estate investors use this term a little bit differently than most members of the non-initiated or people who are kind of outside. So in economic terms, hard money would be money that's backed by gold or backed by hard assets. And real estate investors kind of borrowed that term when they started talking about hard money loans, because a hard money loan is based just on the property itself. Right. If Judah Hoover is a traditional lender and Josh Weidman is a hard money lender, I'm going to lend you based on credit, collateral, income, and character, whatever that's supposed to mean. Those are the 4 C's of underwriting. We won't get into that directly right now. And those, some of those things have diminished over time, but there's more that goes into the underwriting, and therefore there's more favorable terms. With a hard money loan, it is based just on the collateral, quote unquote, just on the collateral. Now, Josh is going to pull your credit and make sure that you, aren't wanted for manslaughter in 18 states. Josh is going to verify some income to make sure that you aren't completely without a prayer in paying him back. But the underwriting guidelines are much looser, especially when it comes to that asset. It can be in worse shape than what a bank would typically lend on. But the rate is then also going to be higher because of that. So that's how hard money loans differentiate themselves from traditional loans and why they're called hard money.
There we go. So aside from being
is that a good explanation for you, Josh?
That was great. That was great. I got to put you on the payroll. Aside from being a hard money lender, I'm also a sci-fi nerd. So nice. I'm super excited about tomorrow. Right? You know what tomorrow is? If you don't know,
I was super disappointed about yesterday. Like, it's the first steps in colonizing Mars. Like mankind does its best work when it's trying to go to war and when it's trying to explore.
Yep.
Obviously, one of those is preferable to the other. We're really good at exploring uncharted territory, and we're really good at coming up with new ways of killing people. Yep. So I think that this step from government to private is awesome, even though it's very much backed by government and things like that. The private citizen, the private company, Northrop Grumman and all these other companies have built, for NASA before, but NASA owned the hardware. A private company is actually going to own the hardware. I also love that, when the shuttle program, when the shuttle program was retired, NASA said, Boeing and SpaceX, here you go. We're looking to you guys to get us back into space. And they awarded and have actually spent more money with Boeing, but SpaceX did it first. Now, SpaceX has been behind schedule. Boeing's been behind schedule. Turns out putting people in space is actually really hard to do. But so there's like, to the degree that you can call the billionaire Elon Musk the little guy or the underdog, this is also an underdog story too.
Well, it's a huge underdog story. Elon Musk wasn't born a billionaire. Right. He took a couple companies. He started with one and then sold that, starts PayPal, becomes one of the PayPal mafia, takes all of the capital from PayPal and starts these revolutionary companies. I don't know if you saw this earlier this week, but he just qualified for his first compensation bonus with Tesla, where he got $700 million in stock. That's pretty great. But his whole goal in making a fortune is to die on Mars. Like, that's his goal. He wants to take that money and push it into expanding human life on other
people always ask me all the time if you could do anything. In the entrepreneurial space, people always say, if money or time wasn't an option, what would you do? I would colonize Mars. If you wrote me a blank check and said I could do anything I want, I would colonize Mars. When people ask me when I was 15 years old, Judah, what's your biggest goal? I want to. Elon Musk is living the life that I wanted to live. Like, he is the guy who has run companies in such a way to colonize space. And I got married and got distracted and had kids and everything like that. And I also don't want to work 18 hours a day like what these billionaires. Everyone says, look at how great their life is. I'll take a little bit of work-life balance.
Well, all right. So what I think is amazing about Elon Musk, and specifically related to SpaceX, I don't know if you remember this or not, but there was a real race to get this government contract when, NASA announces, I think they announced it in like 2009 or 2010, that by 2011, they were no longer going to be using the 1970s era space shuttle to shuttle astronauts to space. So there's a rush of all of these companies that want this government contract. And the race was to create a rocket.
Right.
SpaceX was able to create a rocket with 10 times the propulsion of the competition for 1/10 of the price.
Right.
I mean, that is amazing private industry.
Also, they're the first one to reuse rockets to have them come and land. I mean, that is crazy to remote, to unmanned land something like that, not being there like doing the micro adjustments and everything like that. The fact that it's mind-boggling.
It really
is.
Is.
What that company has been able to do and put together. And I think that what's also so cool about it is, we've all heard the examples and the analogies 100 times of what going to the moon did for us. Going to Mars and and private enterprising, seizing space exploration and space travel is just going to do it. The future is going to be awesome. That's all. I mean, the future is going to be so cool.
I mean, and you look at the combination, I mean, like the overlaps of his companies is really something too. I mean, they're talking about, I don't know if you've seen this, the 1,000,000-mile battery that they're developing with Tesla. Oh, well, so right now the issue is like the batteries wear out after X amount of time, so many miles. They're building a battery that on one charge will go 1,000,000 miles. How much value does that bring to the electric car industry? If you never have,
but how much smaller can we make these things? I mean, like half the weight of this is the battery. You know what I mean? I mean, just think about all the things that technology would have. Iron Man suits. I mean, what's his face here is talking about, he's a modern day Iron Man. Half the reason we don't walk around in Warhammer 40K style, Space Marine armor or Iron Man suits or whatever you want to call it. Like sci-fi loves that idea of a powered exoskeleton suit. It's the power component of it. And we're so close to it. I got to tell you, this is going to shock some of our dear viewers, but I am not a granola eating, tree hugging, peacenik, pinko crazy hippie. Not who I am. It's a goal of mine to buy a Tesla. A Tesla might be the next car. I've driven a couple of them.
Yeah.
They're freaking, the technology is amazing.
And it's continually getting better. They're a car that updates itself. I mean, it's insane. So you're talking about phones, another Elon Musk company, Neural Net. I don't know if you know about this.
I do not know about them.
Okay, this is outrageous. They did a press release maybe a year ago about a neural implant that goes into your brain that allows you to initially to control a phone or a laptop. The next step is for you to be able to control a prosthetic.
Yeah.
And then step 3 with the technology is to be able to implant them in your brain and to have another lobe of your brain connected to the internet so that you access information on demand at any time instantly. It's unbelievable. The guy is living
Matrix level stuff. I need to learn how to fly a helicopter.
That's exactly right. It's insane.
So here's the thing. I know how wicked, crazy, intelligent, smart the human mind is, and I know all that goes into consciousness, or at least I think I do, or actually I realize that we don't understand that. So I do not see AI coming anytime soon. True, real AI. I don't see it happening. We can have that fight later. I do see coming this ability, or I believe it more, our ability to have our synaptics connected to, the internet and stuff like that. That to me is believable stuff.
Last thing, and then we got to move on. But Elon Musk, his whole point with these neural implants, was as AI increases, the idea is to implement it into human beings so that it's not a separate entity. It's something that we are enhancing ourselves so that we can continually compete with that artificial intelligence. And instead of being obsolete, we become, or continue to be the dominant species. It's pretty wild.
All right, moving on. We can fanboy out later. I did not know that you were a sci-fi geek like I am. That's great.
All right. This is about the 3rd or 4th week in a row that the PA House or Senate has passed a bill that Governor Wolf is going to veto. I don't know if it's just an exercise in futility or what, but I kind of feel like we're almost on the other side of this, and this is becoming a little bit of a political, a political show, as opposed to something that is really going to impact life in Pennsylvania.
Yeah, it's hard to discuss it. I really enjoy discussing stuff like this dispassionately and finding it from both sides. And I think that even from the day that you went to that first protest in Harrisburg, we've been able to do that dispassionately. It is getting harder and harder. I mean, I have friends who are on the other side of this issue, and I just don't understand, how they still are there. I mean, I try not to discuss it too much, but yeah, I mean, the bottom line is we are moving towards opening. The best thing I think we can all do is continue to suck it up and deal and grin and bear it. And, we have the ability now to do real estate transactions with masks, with less than 3 people, with booties, which apparently I need to get. Good golly, I'm just hoping nobody actually checks me on that. With all these different things. And yeah, I think that we will be able to, what is it? June 8th is the latest date. To yellow?
June 5th. But after that, Governor Wolf is going to require hypoallergenic thongs to be worn at all showings as well. Well, I mean, the bottom line here, look.
Madness. It's madness.
Right. It's just.
All right. Here's a quote for you. Are you a Bridge Over the River Kwai fan? You know that old movie that ends with the line, madness. Madness.
It really is, and all across the board, I think both sides have some very legit arguments. It's just we just got to move on. We got to move on, and
please.
I know. It feels like we're done, but we're not.
Right.
All right, unemployment. Okay, I feel like I'm
mixed bag on unemployment.
There's really good news here. There's not so good news. I feel like when I'm looking at housing,
so let's set the stage. What are the unemployment numbers? 2 million more people filed for first-time claims. So the number of new claims went up, but it went up by a decreasing. There was more people who filed for unemployment than got jobs. So there's more people out of new claims, but
total unemployment went down by 4 million. So
continuing unemployment went down by 4 million. So people continuing unemployment is people who have been on unemployment for at least 2 weeks. New unemployment claims. So there was 2 million new claims. 4 people went off the rolls. So there's 2 more million people employed this week than there was last week.
And I think that's reasonable to understand. As more states are opening up, as Pennsylvania is getting more and more counties into the yellow and green and everything else, and things are starting to return to normal, you would think that employers would need to hire people back. The part that really bothers me about this whole thing, we're going to talk about housing news in 2 minutes here, but there's so much good news in housing, but I don't understand how it can recover if you've got 15 to 20% of the population without a job. How the heck?
Well, yeah. So all data. I bought a 342 unit deal in Tulsa, Oklahoma once. Put together. I mean, I syndicated that deal 15 years ago, 10 years ago, before syndication was the cool kid on the block that it is right now. You know what I mean? Just like I was a sci-fi nerd before it was the cool thing to be, when you got beat up for being a sci-fi nerd. So I'm not bitter. Don't worry. I don't have emotional scars. So the reason Judy, you're from Lancaster County. Why'd you buy a deal in Tulsa, Oklahoma? Because I followed jobs. I paid a demographer $15,000 to tell me what the best markets were in the U.S. and how and why. And all of this is trackable. When Tesla wants to hire or lay people off, they tell their shareholders that. When Cisco Systems wants to hire or lay people off, when Walmart wants to do that, when all of these companies want to do that, they tell people who they're hiring, who they're laying off, whether it's temporary or permanent, or whether they're going to be expanding over here but contracting over there. And you can track all of that information, and you can figure out, okay, a whole lot of companies said they're hiring in Durham, North Carolina over the next 6 months. Is it a whole lot, or is it a whole heck of a lot? And what's the housing numbers look like, and things like that. So jobs and housing have always been linked. Yep. For the rental market, for the new purchase market, and everything like that. It is a studyable science how linked jobs and housing are. What's crazy right now is unemployment benefits are so freaking good that there's like this delay in the effect of loss in jobs and a dip in the housing. So I think if I were to explain it to people, that's my less than 5 minutes, but more than 2 minute explanation.
Okay. All right. So what you're saying is housing is going to be terrible?
It depends on how big the recovery is. Like exactly. It's a clutch, right? So you're saying if my engine's going and it's connected to the wheels and the wheels are stopped, that the car stalls? Well, no, I think I'm bullish on America. And I believe that we are going to see a quicker recovery than what people project. But I project that both sides are going to be able to claim a victory here, because the people who are bullish on America are saying, yeah, we're going to have a pretty quick recovery. And then the people who are, doom and gloomers, let's say, when we have a quick recovery, they're going to say, oh, well, you guys said there was going to be no, lapse, and there was going to be no downturn, and there was going to be no problems at all. That's not what I'm saying. I'm just saying it's not going to be awful the way the doom and gloomers are claiming. Kind of like we don't have 2 million deaths in America. Everyone's saying, oh, we're under 100,000. Right. Even with social distancing, we weren't sure would be able to get under 2 million deaths, according to some models.
Right. Okay. So there's a couple things here and that I wanted to cover with housing that yeah. You brought up and Steve brought up. Or not housing, excuse me, unemployment. Number one, there are a lot of people that are making more money staying home from work than working. There was an article that I started reading earlier this week about a problem the Fed was having getting people to go back to work. And I just found it on LinkedIn again this morning. I was looking for it last night to get ready for the show. But bottom line is that's a real problem. And we haven't really felt a lot of the pain that comes from this unemployment necessarily, because it's been backed by exceptional unemployment benefits, right? So what they're going to
largesse of not the U.S. taxpayer, but the grandchildren of the U.S. taxpayer
and their kids. And it's wild. That's one thing. The other thing,
that almost sounded like a partisan comment. I was crossing the line.
But so there's a flip side to that as well, and it's that look. We've got so much money pumping into the economy right now. We're going to talk about housing prices in a minute. With all this additional capital, it's not surprising that housing prices are up. There's more money, and assets typically rise when that happens.
I forgot to check consumer spending numbers.
I didn't see them either. But we'll get back. Here's the other issue that we're looking at, and there's some positive news on this. If we don't get back to normal soon, or if people just have enough of it and get back to normal, being normal again, and the social distancing is limited to when you go to a restaurant to pick up your food, but otherwise we just act normally, and there's a huge uptick again in infections,
right,
and deaths, I guarantee you we'll go back to shutdown. Guaranteed. People will freak out, and governors and people will want that power back, and they'll be justified in making these in making some decisions that aren't necessarily great for the economy. And so, like right now, I read something this morning that as soon as October, Pfizer may have a what the heck's it called? Not a vaccine for the COVID virus. That's huge. That's a game changer. If they've
All right,
got
hey, hold on. I just looked up these numbers. So this is out, 37 minutes ago. U.S. consumer spending fell by 13.6%, whereas personal income, which is wages, interest, dividends, everything like that, personal income counts all that, rent payments, any way you got money coming into you, not net wealth or anything like that, but actual income increased by 10.5% in April. I would have to go back and see what the numbers for, March were. But the bottom line is we are up from spending is down, which when spending is down and income is up, that's why we're also seeing savior numbers, rate of U.S. Household saving going through the roof as well.
Yeah. Yeah. All right. So let's look at housing. Really good news on the housing front. If you're an agent and you can find a buyer that is qualified for a mortgage or a house that needs to be sold, it's likely you're going to make some money this summer. Pretty much anything that's hitting the market is selling. Listing prices are up 3.1% from this time last year.
Right.
We've got volume down 20% over the same period, which again, not all that surprising, but you would expect to see some of these people that pulled their houses off the market to be getting these houses back on the market at this point. And I don't know that we've necessarily seen that. Right? I mean,
it's there has been a serious inventory crunch. There continues to be a serious inventory crunch. Yeah. I am going on a listing appointment here at 2:00 today. Walking a property. It's a rental property. So there's going to be nobody there, but I just have to take some pictures and see what it looks like so that I can advise the owner what we're listing it for. Flip just sold, right down the street, and this property's not a flip, but the flip sold in like 10 days, 4 months ago, 5 months ago, something like that. And I think we're going to increase the price by about 3 to 5% and test the market to see what's actually going on and see what's actually happening, because I see a strong real estate market.
Yeah, I agree. You've got pending sales up 50% since April, which again is something you would expect as states begin to open. But the biggest, the biggest push here, I think, is these ridiculous low interest rates. I mean, 3.08%, over on the 30-year fixed. That's remarkable. That is remarkable. I mean, it's almost free money.
Yeah, it's crazy when you factor in inflation. And when you factor in inflation, therefore the time value of money, and you also factor in that loan, a primary mortgage is tax deductible. Was what I'm trying to say.
Right.
When you factor in the tax deductibility of that interest, now the problem is, itemization is what, $25,000 for a married couple. If you're paying $25,000 in interest a year, hopefully you're giving 10% to a church, which counts. Hopefully you're also paying, some local taxes and things like that, which count. So I'm just saying, the interest rates are low, which when you factor in tax deductibility, makes them almost non-existent. However, the itemization tables are now different, and therefore that's not quite the benefit that it once was.
Right, but I mean, think about it.
That was clunky. Sorry for that clunky 45 seconds of dialogue.
The mortgage rate on my first house was 6.5%. That was $650 a month for $100,000, right? Today, for a $200,000 mortgage, you're paying $600,000, or I'm sorry, $600 a month. I mean, the affordability on a monthly basis for people that have jobs that are predictable is phenomenal. I mean, it's no wonder prices are up. It makes a heck of a lot of sense.
Hold on, can we just highlight this shameless self-promotion here? I mean, she's my sister, but I also love shameless self-promotion. It could be a good time to talk to your advisor about moving to a Roth. John, I love you.
You ought to max out your Roth IRA. 100%.
Max out your Roth IRA, max out your 401k. Here's the other thing. The stock. Look what's going on with the stock market. People don't buy stocks if they don't think that company is going to be doing well 3 to 6 to 8 months from now.
I don't know.
I hate when people refer to the stock market as the Wall Street casino, or it's just gambling or things like that. And I say that as somebody who owns very little stock and is not a stock guy or whatever. The stock market is a good indication of what some very wealthy, well-connected people think the economic times are going to be 6 to 8 months from now.
I totally disagree with you, but that's okay. I mean,
really?
how do you've got companies that are being valued and bought at ridiculous multipliers of their earnings. I mean, you look at a company like WeWork, and WeWork's an exception, but it's an extreme is insane, and it's a good example of where investors were recently.
No, stop. WeWork is not a good example. It never went IPO. WeWork is an example of how stupid some hedge funds can be trying to create and chase unicorns.
They were proposing an IPO price of 50 times earnings. Are you kidding me? That's insane. I mean, and these are Wall Street guys doing this.
Right.
Whatever. It is what it is.
Okay. It is what it is.
Okay. Look,
I hate that as much as I hate the new normal.
Well, but it is what it is because it's true. Like, one of the reasons I don't invest in the stock market is because I don't understand it, and I don't think it's predictable on fundamentals. But if you see it and you're like, "Hey, this makes sense to me," you're like, "That's great." That's all I'm saying.
I think that the same could be said for California real estate.
Yep.
People don't buy California real estate for the cash flow; they buy it for the appreciation. And I think that there's some stocks that you buy because of the earnings ratio, and there's some stocks that you buy because you think what the stock price is going to go up and what the vision of the company is and what it's going to be. So there's two ways to do that. Also, just like the fundamental numbers of like, what do you need to put down to buy a rental property? That used to be 30 or 40%. Now it's 20%. Now it actually, if you know how to do creative finance, it could be 0%. So great. What were PE ratios? What was the standard acceptable market-driven PE ratio in the 50s? That's one answer. What is it today? That's a different answer. Is any of them wrong? Is any of them right? I don't know. But yeah.
No, I got you. I definitely do.
I think there's something to be said for Wall Street being where it is, and I don't think that it should be completely discounted. And it's very much like what's going on in the in the real estate world. There could be some disconnect there, but I think that the illiquidity of the real estate world makes it more interesting, dude. We don't have his eyeballs registered in our Facebook views. So, I just want our dear listeners to know that when they check our numbers later on today to see what our total views were across all our platforms, you have to add one for the little Weidman watch back there. What do we have next on the content grill? What do we got grilling up here, my friend?
The rental market, rentals and evictions. We're entering hopefully our last month where bad tenants have a moratorium on their rent. And, I think this is going to be an interesting time over the next month where you have tenants that know for a fact they're going to be evicted. They're going to be the ones looking for housing because they haven't had the filing yet. There's nothing on the record. So it's like it could be a mad sprint for people that are looking to move before their eviction is recorded and their credit and record is banged up. So I think that's
excellent commentary, excellent insight, and I completely agree. So right now would be an amazing time to be sure that you're doing landlord verifications.
That's right.
So if you have somebody who wants to move into a property, we need to do landlord verifications. I didn't even think that. I need to check with my ops people and see whether they've done that, because I think right now even we as a company are so focused on, okay, we can start filing again. Who do we want to file on? Who don't we want to file on? When do we even, just because the state, because we're at 98% rent collection. And we didn't get there by accident. We got there because we're very, very strict so that in times like this, we can be more lenient. You know what I mean? We only have a bunch of good apples to begin with. If you're limping people along during good times, when bad times comes, it's going to get even worse. And so when bad time comes, what you do is you work out with people with empathy and try and see what you can work through. This is going to be an interesting next 45 days in the rental world, to be sure.
Yeah, for
also
sure.
Because they're going to be so backed up, right? I'm working with a client right now who is trying to get a VA loan to purchase a multi-unit so she can house hack. Pro tip, that's something everyone should be doing right now. She listened and said, yeah, let's go ahead and do that. So she's trying to house hack, but her her loan is stuck in underwriting. It's only been recent that she's been able to order the VA appraisal, and they're so backed up right now. So I think the eviction courts are going to be super backed up as well.
Well, so we talked about this, the end of these unemployment benefits coming, the supplemental unemployment benefits coming up here. I think that's a big part of, I mean, I know that Slatehouse does a great job on selecting the good tenants and things like that. But I think across the board, there hasn't been a huge uptick in non-payments of rent. And
30 to 40% have been, rent collection is down. According to the National Association of Multifamily Owners, is down, I forget, like 30 to 40%.
Okay. All right. Then I stand corrected. I just think that right now we're in an artificial state because even the people that are unemployed aren't necessarily financially hurt by it as much as they will be when those unemployment benefits end or the supplemental unemployment benefits end. And now they're left with half of their paycheck from before, which is, a third of what they were making while they were sitting at home. So, I think that's coming. You've got the backlog of evictions from the last 3 months. And in addition, you're going to have new filings that are coming up as this, as unemployment likely continues to grow until we get the shakeout of everything back to normal. And not new normal, but like normal, where, whether it's working from home or not, we're back in a society where people aren't talking about COVID every 3 days.
Right. Exactly. Yeah. It's going to be interesting to see for sure. And I think that there's going to be huge backlogs, and I think that we need to do landlord verifications directly to the landlord, and also, by the way, good luck verifying that it is the landlord and not just the tenant's sister on the phone.
Right. Well, so one other item, this is more in medium-term landlord news. I think it's really good. And that is because these lenders and the typical tenant market is the higher-end tenants, they want to transition into first-time home buyers, right? Well, the first-time home buyer market isn't phenomenal right now. It's not huge. It's not great. The down payment requirements have gone up. The credit requirements have gone up. So people that were once ready to buy, now they're not so much. That's going to lead to some really quality tenants. Yeah, we're going to have to kick out the people that aren't paying. It's going to take a couple months to get those people out and get things back to normal. But those that are left over applying for to rent an apartment or a house, they're probably going to be pretty doggone good tenants. 650 credit scores and they have 10 grand in the bank, but they don't have 30, so they can't buy a house. That's a great tenant.
Yeah, absolutely. Or or they're not interested in buying a house because they don't want to sign up for a 30-year mortgage because they just came out off of a layoff, or they just moved across the area and moved across the country or things like that. There's a lot of reasons why somebody would psychologically say, man, I could buy, but I just want to wait another year or two and see what happens.
Yeah, that's exactly.
Also, nobody wants to pay the stupid tax, and I feel that real estate is going to take a dip. You feel that real estate is going to take a dip. It's just a matter of how big and when that dip happens. Right. And there could be a lot of people who are sitting on the sidelines not wanting to buy right now because they think that real estate could take a larger tumble 6 months to a year from now. There could be pretty big ripples from this.
Well, exactly. I mean, the unintended consequences are really what what we're waiting to see, the things that we can't even predict yet. And I think there's people holding their breath for an uptick in new cases. You know, I mean, Lancaster, I don't know if you saw this, Lancaster County is the only county that has an increase in the COVID infection rate in the entire state, as opposed to the second half of May compared to the first half of May. No, it's not huge. It's not terribly significant. But I mean, even Montgomery County, like Montgomery County outside of Philadelphia, was one of the hotbeds originally of where the virus really started. And, they started increasing testing, and their numbers are still kind of staying the same. But I think that coming out of this and going back to normal and seeing people kind of starting to know people that are infected and realizing that it's either as bad as they thought or not nearly as bad as they thought is really going to play out. And we can't predict what that's going to look like.
You're exactly right. Yeah. So Josh, we try to go a little bit longer here on, well, we don't try to go, we try to not go an hour on Fridays, but we allow ourselves to go up to 45 minutes. So do you have anything else cooking up on the content grill? Any other sizzling news stories to discuss, or should we talk about next week and wrap up?
I'm sure I missed something.
Right.
But yeah, that's all I got for today. I mean, next week we're going to be covering.
If we missed anything, guys, either in our analysis or any news stories, let us know about them. We're very interested to know what we missed. Because if we missed talking about something this week and you think it's worth talking about, we want to know so we can talk about it in the future. The one thing that I will address right here that our boy Steve said at some point is what new parts of Philadelphia does he think are up and coming? I just want to say, guys, like as a mentor, coach, largely unpaid advisor in the real estate world, those are really hard questions to ask because part of what you get paid for as an investor is seeing what other people don't see, is believing what other people don't believe in. So, that is quite literally what you're paid for as an investor. And if you want somebody else to tell you what deal to do, how to do the work, and lend you the money, like, what are you bringing to the table exactly?
Dude, you're killing him. Holy cow. So listen, one thing that we might want to do here, not next week, but on a future show, we might want to address like how to evaluate a market, what to look for in different types of markets. What's a stable market look like? What's a decreasing and increasing markets, and how to identify opportunity. That might be something we can cover.
And I'm not trying to be hard on Steve here, because like here's the thing: if I say Fishtown is up and coming, and I'm wrong, and he buys there, well, I just cost him money. You know what I mean? Like, so there's enough places where you can go get free opinions, and opinions are one of those things that are worth exactly what you pay for. So I think specific information and specific opinions are worth what you pay for them, and you need to follow your own counsel on those things.
Well, and so one thing to understand with real estate investing, very, very, very important. It's called real estate investing, not real estate speculation.
Thank you.
We're not necessarily looking for the next hot market. There are indicators that we can look at and say, predictably, this is where things are going to turn out. But looking into the future with a crystal ball is bad. I mean, you might as well take your, take your money and take it to Vegas or take it down to Atlantic City or, wherever else. Investing, especially in long-term holds, the best advice that I can give anybody is it's better to overpay on a long-term hold and get a property in the right location than to, speculate on the next best market and you end up with crappy tenants for 10 years and, the market never changes. And now you got crappy tenants in a crappy neighborhood that never gets better. That's no good.
Yeah. If you look at the numbers, my buddy Ron Shepard did the math on this and showed it to me and I was just blown away. If you break even on cash flow on a long-term rental, but you have like a 30-year fixed mortgage that you put 20% down on,
Yep.
your ROI just through principal reduction is, I want to say 30%, 20% annualized. Like, it's just the ROI on principal reduction over the life of owning that loan is ridiculous.
Significant. Yeah. Yeah, absolutely. Absolutely. All right. That's it. I think we covered the most important news. Anything that we didn't cover here, it's not important.
Not important. Shouldn't worry about it anyway. Won't affect you.
Hey, you guys have a great weekend. Judah, thanks for a great week. We'll be talking about marketing again next week with a great guest. And yeah, until then, enjoy your weekend, and we'll see you on Monday at noon.
See everybody.